Hi, my name's Eli Hallowell, and I'm the CEO of Hair Story. And I am going to be talking to you today about the Small Business Owner's Guide to the CARES Act. This is for hairdressers. I'm not a hairdresser, but I've worked with hairdressers for most of my career. And I wanted to walk you through this document, which is really helpful. The government passed an act on Friday for $2 trillion to help address the coronavirus crisis. And there's a lot available to help hairdressers right now. And I want to make sure everyone understands this. Caveat is I am not an accountant, and I could be wrong because the rules have not been really clearly laid out yet. But I'm going to do my best to walk you through what this means. And then I'm going to post this video on The Break Room, which is a community website for hairdressers, by hairdressers. And anyone who has any questions can post their questions there, and I'll do my best to stay on top of them and respond. So, what is the CARES Act, and particularly the part that applies most to hairdressers and salon owners is the Paycheck Protection Program, the PPP loans. So these are loans that are going to be given out to small businesses and actually to individual self-employed people as well, supposedly over the next couple of weeks. And they're designed essentially to do a couple things. Number one is to keep people employed. So if you're an employer and you're having a hard time making payroll, this is designed to give you money so that you can then hand it off to your employees and continue to pay them during this period of economic quiet, and that they can survive and they can pay for their lives. Secondly, it's to enable you to pass the money forward, not just to employees, but to pay bills. So to pay for your rent, to pay for your mortgage, to pay for the things that you need to keep the lights on, even though the lights will be off, while we're all staying at home and social distancing and trying to help kill this virus. Third, this is a way to have money flow through the economy. The economy has come to a standstill. It's slowed down. And if they can give money to people, to give to employees, to give to the people who they owe money to, so the landlords and everyone else, then the money will flow all the way through. The landlords will be able to pay for their loans for the buildings. They'll be able to pay the interest. The banks will stay solvent. Everything will be okay. So that's the idea. Having taken a quick look at it, I think it's a pretty good idea and a pretty good deal, and I think it's going to be pretty great for hairdressers. I'm going to be using some basic industry numbers here. The average hairdresser earns $70,000 a year. Now, that could seem like a lot for some of you, and it could seem like lower than some of you make, but I'm going to use that number as the average here. And that means that with that number, there's a lot of money that's going to be eligible to be given out to hairdressers. I've done the math. It's somewhere between $5 and $10 billion that is going to be given to hairdressers, salons, and to all of you. So this document here was prepared by Senator Ben Cardin's office, and it's really helpful. I'm posting it on the website too. I looked around the entire website over the weekend to try to find the best understanding of what does this mean, and this is by far the best document I found. It has a frequently asked questions section, and it describes the PPP loans in summary at the top. And basically the idea here is they're saying, take a look at your business and how much you were paying employees or how much you were earning as a hairdresser over the period of time a year ago from February 15th to June 30th. So they're sort of from when the coronavirus hit through to June, which is when they're assuming this is going to be over. If it's not over by then we're going to have other stuff we're going to have to deal with. But this is meant to cover that window. And so for anyone who was in business a year ago, they want you to look at your numbers from a year ago. If you weren't in business a year ago, but you were in business from Jan 1 to February 15 of this year, then we're going to use those numbers as your math. But it's basically to say, okay, how many people did you have on payroll and how much were you paying them? And then the government's going to give you enough money for 2.5 months worth of payroll. So not the entire time, but 2.5 months worth of payroll. The first question here is what types of businesses and entities are eligible for the PPP loan? And basically what this says is that any business that has 500 or fewer employees is, so that's doesn't apply. I mean, that applies to everyone in the hair business basically. Where the individuals operate as sole proprietorship, so that's a second qualification. You can be a sole proprietor or an independent contractor, and some eligible self-employed individuals. So that's really important. That means that it's covering pretty much everybody in the spectrum. I was worried it wasn't going to cover people who don't have their own entities, who don't have an S Corp or LLC, and are just sort of working for themselves and hairdressers for themselves, and they just file their regular taxes. It looks like that's going to be covered, but that's one of the big question marks, okay? And those are sort of the big covered. So it looks like we're going to be covering salon owners clearly. So if you have a commissioned salon or an employee-based salon where you're paying salaries, you're definitely going to qualify here. If you're an independent hairdresser and you're working for yourself and you have your own business, you're going to qualify as well. And if you're a renter, you should qualify too. So that's also important. You're an independent business yourself. Who's not going to qualify? I think technically here, if you are a rental salon owner, you're going to have a hard time showing that you have payroll. Unless if you're an individual hairdresser who makes money yourself and you also happen to be a rental salon owner, then you'll qualify for your own earnings, but you may not qualify. I don't think you're going to qualify as a rental salon owner. And if you're an employee at a commissioned salon, you're not going to qualify either. The good news is, for both of those categories, is that other people can qualify and take advantage of this on your behalf. So what does that mean? If you're an employee at a commissioned salon, then your salon owner can apply, and they'll have money to pay you, basically the amount you would have earned if you were earning commissions, which is fantastic. And if you're a rental salon owner, then you need to get all of your renters to apply, and they can pay you rent. And you'll see, based on the way this works, they have to pay you rent in order to get the benefit themselves. So they will pay you, and you'll be okay as well. The next question here is, what are the affiliation rules? I don't think that applies to hairdressers. I wouldn't worry about that. And neither does a not-for-profit question, which is the next one after that. All right, this is the big part. How is the loan size determined? So here's where the math comes in. Basically, what you're going to do is you're going to look at how much you earned if you're an individual, or if you are a salon owner, how much you paid out in payroll from February 15th to June 30th last year. And you're going to take that number, you can look at it in total and divide it by 4.5, or you can look at an average month and say, okay, what was the average for that time period? Because they're trying to say, what's the average month? And based on the $70,000, the average month works out to, I think it's like $5,800. Let me do the math right now. At $70,000 of income for a hairdresser, which is the average, it's $5,833. So that's the average wages that someone would be earning. And what's interesting, you'll see later on, is you're allowed to add to that a bunch of other little things like health costs and state taxes, pension costs, anything else like that. You can add to that number. And when you get to the final cost per employee, then you can find out how much you owe. One thing to know, it says in here that employees who make over $100,000 a year are not eligible. But what that means is it's capped at 100. So what you would do if you earn more than 100,000 a year, or you have an employee who earns more than 100,000, you will take the 100,000 as the cap and just take that and divide it by 12, and that's how much that person was earning in that 1 month. So in any case, what you're going to do is take your total. For the average hairdresser at $70,000 a year, that's the $5,800. You're going to multiply that by 2.5. So if I do that here, I get to $14,583. So it's basically going to round it to $15,000. So $15,000 is what the government is going to give every hairdresser in America. That's how I'm reading this. That's pretty awesome. And that's going to let you, if you're the business owner, pay your rent, pay your mortgage, pay your utilities, pay your staff, and it's going to let them pay for their lives, pay their own rent, pay for food. It's going to keep the economy moving. So again, you use the numbers from last year during the Feb 15 to June 30 period, or you can use this year's numbers if you weren't open last year from Jan 1 to Feb 15. If you were not in business at the time, if you shut your business down before Feb 15th, you do not qualify. And you should also know that if between Feb 15 and now you have laid people off, you can count those people in your number, because the whole idea is that you're supposed to hire them back again. You're supposed to bring them back into the employment world and give them money. That's the whole idea of this. Okay, so what are the eligible costs for payroll? Basically, this is the way that you calculate the number that then gets multiplied by 2.5. So it's compensation, it's accrued vacation, it's fees for if you had to fire somebody and you had to pay fees for that. It's healthcare, it's all the other stuff I talked about. And the next question is what costs are not eligible. Here's where the $100,000 kicks in. It's a cap of $100,000. You cannot count anyone who is not a U.S. Resident. So anyone who's on your payroll, if by chance there's someone who is not a U.S. resident, they don't count. Okay, this is an important one. What are allowable uses of loan proceeds? So you get the money from the government. You get the $15,000. If you have a 10-chair salon, you've got 10 employees, you get $150,000. What are you allowed to do with that money? Number one, payroll costs, right? That's the number one most important thing. Number two, you're allowed to, or they want you to continue to pay for your healthcare premiums, right? So if you have health insurance, they want you to keep paying that so that you can stay insured. Salaries and commissions, also, you can continue to pay sort of on an as you would have paid basis. So the amount you would have paid last year when they were actually earning commissions, you'd pay people what they would have earned. Payment on interest or mortgage obligations. So if you own your building and you have a mortgage for it, you can use that to pay. You can use the money to pay that. Rent, including lease agreements. So that is really important. I think that's going to work for rental salons where they have a lease agreement with their renters. So the renter can use the money to pay their rent for the chair, and that's going to be a usable use as well. Utilities and any other interest on debt that you may have. So why is it important to know what you're allowed to pay with the money? Like they give you the money, why do they get to tell you that, here's what you're allowed to pay for with it? The reason is that these loans are going to be forgiven. That's the idea. But they're only going to be forgiven if you've used all of the money given to you on things that are allowable. So if you were given $15,000 and you only were able to justify that you spent $10,000 of it on allowable expenses, then you're going to have to pay back the other $5,000, and you're going to have to pay it with interest. So you're not going to have to pay it for right up front. I'll tell you that in a minute. But that's why it's so important. So you should not apply for more money than you're going to be able to use. I guess that since it's 2.5 months versus basically 4.5 months, you'll probably end up using all of it. But I just wanted to point that out. That's why they're telling you what an allowable use is. All right. Next question, what are the loan terms, interest rates, and fees? It's a 10-year term, so if there's a portion of this loan that is not forgiven, the loan is to be paid back over 10 years. The maximum interest rate is 4%, and they're not allowed to charge fees or anything like that. The bank won't. So how is forgiveness calculated? Again, this is wild. They're giving you billions of dollars and they're going to forgive it. They're going to write it off. So forgiveness is calculated by looking at the amount that was given and saying how much was used for appropriate uses, right? And anyone that you had on your payroll who you have since fired and don't have them on the payroll anymore, that doesn't count as an allowable expense. So the whole idea is they're trying to force people to keep people employed. And it's not about the specific person, it's about the number of people, I believe, but not maybe it's this, it could be specific people. That's definitely something to understand and try to figure out. So that is how you're going to figure out. You have to keep the person, and you actually have to keep them paid at least 75% of what they made a year ago. If you take people on a pay cut and you take them from what they were making and you take them down below 75% of the prior year, then they're not eligible, and that won't count towards loan forgiveness, and you'll have to pay that money back. The next question is, how do I get forgiveness on my PPP loan? Well, you're going to have to document everything. So document all of your payments, document all of your rental payments, all of your lease payments. Everything needs to be fully documented. You're going to then give that into the loan officer who gives you the loan to begin with. They're outsourcing this to tons of banks. And when you have the documentation, then the government will say, okay, you don't owe us this money anymore. What happens after the forgiveness period? Well, then it just becomes a regular month. There is a period of time where interest and principal will be deferred for 6 months. So there's going to be nothing owed for 6 months, but let's just say that you don't have any appropriate expenses and you just want to take this as a loan and somehow you were to qualify for it, then it would just be a regular loan that you would have to pay back, a 10-year loan at 4%, which is a pretty damn good rate anyway. Can I get more than one PPP loan? No. And where do I get my PPP loan? Well, there are SBA lenders. There's a list, and we'll put a link. I think probably most people have seen what the link is. There are like 20 vendors, and they're banks that are all over the country. If you don't have one of those banks, you need to try to get a relationship with one. If you do have one that's going to help you, try to get it faster and get at the top of the list. And then, how does the PPP loan coordinate with existing SBA loans? So if you already have one, if you live in a disaster area and you had to take a loan out before, I don't really know how this works, but the point is that it does coordinate. It's okay. You can still get the loan. And same with the last question. So that's my explanation. If you have questions, please go to the break room and put them in. The last thing I want to say is that this is a big deal. This is a huge, program. This is a big deal for all of you. It's $15,000 for the average hairdresser that the government's offering to give out, and it is $5 to $10 billion. The whole package is $2 trillion, which sounds like tons. This portion of loans, I think, was $500 billion. So if every hairdresser were to take advantage of this, that would be a big share. And my concern is that the money's going to run out quickly. So I think you should be applying as quickly as you can for these loans and get at the front of the list. Number two, you have to remember, you have to spend this money that you get on business activity. This is not money for your savings. This is not for vacation. This is not for anything other than spending it on your staff, on your rent, on the things that you need to pay so that we can keep the economy moving. This is not just something that's to be taken advantage of. It's to be used to help everybody in this ecosystem. And I think if this works, we should be okay. I think it's a very, very strong, powerful program where they're really giving a lot of money and they're putting it in the hands of people who are going to hand it over to the rest of the economy in ways that is going to make it okay. As long as this virus doesn't last for 6 months or a year and we're in lockdown like this forever, then I think it's going to work. And if it does last longer, then I think they'll have to come up with something else. I hope this is helpful. Again, my name's Eli Hallowell. I'm with Hair Story. We're here to help hairdressers. I've got to say, our motto is particularly appropriate right now. That we're rethinking everything about hair in a world where the old rules don't apply. And when we came up with that motto, I had no idea how much the old rules no longer apply, but they don't. And so we're here to help you figure out how to navigate. Thank you very much. Bye-bye.